Dude, I'm out here talking to this microphone. It's not even on. Yo, good morning, people. Look, I'm gonna tell you guys a secret. We're gonna have to keep this between us. I'll tell you guys a secret real quick. Guys, I don't know if you can tell, but I fucking love my job. I absolutely love educating. I love coaching. I love being on these calls, live trading. And I am one of those sick people that comes dancing to work every day. All right. I'm one of these people that just gets up and just kicks my heels together and just tap dances to work. People, I fucking love markets. I don't know what you guys, what your opinions are about markets. I don't know if you guys love trading or if you guys are just indifferent about it. I don't really know what your perspective is. But I'm telling you guys from my perspective, I fucking love trading. Tell me, okay, this has got to be more.
Right there with you, bro. I love it too, bro. Eat, sleep, and drink Forex.
There we go. That's basically what the schedule is. Like, I mean, obviously, guys, I take a lot of time for myself and there's a lot of work that needs to get done. Because if you're too motivated, like I'll be real with you, like when I'm too focused on trading, I don't get the best results because I tend to spend too much time on the charts, over trading mostly, going back into the markets, giving back profits, whatever. I have creative outlets outside of trading, right? That I like projects and events and things like that will keep me occupied. Trading for me is it has to be very mechanical. So I'll even give you guys a secret. For my personal trading, I've been spending a lot more time on MetaTrader on my computer as opposed to MetaTrader on my phone. Now, for the sake of this, I'm going to show you guys the MetaTrader on my phone, but I just found it so much easier in terms of holding a trade, sitting through drawdown, scaling in positions, moving stop loss, like all of the things that I normally did on my phone, I'm now doing strictly on the computer. The reason for it is I started to realize what the app did. So I study development, I study businesses, I study apps, I study the greats. And the greats always have something in common. Facebook, Instagram, YouTube. These are apps that keep you on the fucking app. Now, who here in the comment section has ever had the same, like checked the MetaTrader the same way that you check Instagram? We all been there, right? You go in there, you open your phone, you check Facebook, WhatsApp, fucking MT4, and then TradingView. Or you check Instagram, YouTube, MT4. Like some combination of those. Has anyone ever been there on their phone where you're basically just treating it as if it was a social media? Well, I'm going to explain to you guys a secret, and hopefully this kind of wakes you guys up as to what's really happening here. A lot of the time we kind of blame ourselves, right? We're like, oh, damn, like, why am I checking this so much? Yada, da, da, da. Guys, our biological system, your brain, your body, your neurochemical responses to things, they're all very, very old, right? About 10,000 years old from what we can tell. Our body's pre-programmed to respond to certain things, right? A lion is chasing you, you better fucking run. Someone's going to invade your village or whatever, you're going to have an uneasy feeling, that intuition. So all of the biological systems that we have are basically geared towards survival or towards pushing the civilization forward, whatever it is. These app developers, they understand psychology a lot more than we do. So what they can do is they can play on your biological systems to manipulate the neurochemical response. If we feed you this stimulus, you're going to get this response in your brain, and that positive reaction is going to get you addicted to the app so that you can continue to use it. A lot of folks say, I'm not addicted to this, that, and the third. Well, try to quit. Try not to use it for 5 days, and you'll start to realize how strong the neurochemical response is. So what I noticed with MetaTrader 4 is that these developers are even smarter than the social media folks, because what they've done is they found a way to gamify trading. And the gamification of something is what makes you take it less serious. So on the phone, it's too easy to trade. On the phone, it's gamified. On the phone, there's these different colors, the red and the blue, that are trying to manipulate your neurochemical response to the what's happening on the charts. So the gamification of trading is very unproductive. That's why I've decided to move over to that 1999 fucking screen from MetaTrader, because there's very little emotion involved when you're just looking at trade levels, as opposed to looking at fluctuations in colors and the numbers and drawdown and the money and all of the different things that make it very easy to overtrade and over leverage, and to basically give back profits because they've made it so easy. So, are we all clear about the gamification of trading and how trading from your phone can be distracting or can be unproductive for your trading? Does that make sense? I know a lot of folks are sitting in the group chat like, not me. I'm fucking Mahatma Gandhi. I have no emotions with trading. Well, that's good for you. For the rest of us, I think it's very important to stay realistic about what is going on here. I think it's very important for us to be rational about the fact that the markets are not here for us to make money. They're here for someone else to make money off of our activity. All right, so stream is officially on YouTube. We're streaming live. Let me go through a few of the different pairs that I'm looking at, and then I'm going to go through and focus on Nasdaq. The thing about Nasdaq is that I'm trying to focus strictly on the smaller time frames. And a big thing about live trading with me today is, well, not really today, but from now on, is that usually I get on these live streams and I look for a trade. What we're going to be doing here is I'm going to be using these live streams to go through news, crypto, whatever. If we see a trade that we can't ignore, then we'll take it. But I am not in the business of looking for a trade. Instead, I'm in the business of being on the charts. And if a trade presents itself, then we're going to take it. All right. It's a little bit of a shift, because before I'm just trying to find an opportunity just for the sake of taking a trade on the stream. That's not even how I trade. So to give you guys a very accurate perspective on how I trade, I'm going to do my best to just watch the markets. If there's an opportunity that I can't ignore, then I'll jump in. GJ profit. This is about as easy as trading can get. A triple top right here, previous sell zone. We broke below. We closed bearish. We had multiple closures below the zone. And you had, I don't even know, probably 3 days of opportunity to enter at 156. Now, shout out to Omar. I'm pretty sure he had a sell limit or a manual sell entry at 156, or I think it was a little bit lower at 155.9. Either way, that trade is in profit, and I'm looking to take it all the way down to 155. Am I personally in this trade? No, I'm not trading currencies as of now. But this is one of the ones I called on the Sunday Outlook. The target is going to be down at 155. Is there a re-entry opportunity? If we come back up to this resistance, potentially. But here's my take, guys. The longer that we spend consolidating, the less confident I am about a clear break. So what I really want to see from here, in order to confirm the bearish move, is just a break to the downside. If we get one more push up, there's actually a very good chance that we break through the zone, because you've had resistance, resistance, resistance. If it comes back up to test it again, there's a very high probability that we break through. The more times that price tests a zone, tests a zone, tests a zone, and it can't break, that's when you know that it's most likely going to push through eventually. So what I like to do is, if I find the liquidity zone, I'll enter the first trade. If it comes back to retest, I'll enter the second trade. By the third trade, I'm starting to get a little bit skeptical. So I'm reducing my lot sizing each time, because by the fourth time, this thing is going to break through. Do you guys understand what I'm trying to say? The probability that it breaks through gets higher each test. So up to 3, now you have a high probability trade. But anything after 3, now you're starting to get into the territory of it's most likely going to break. Let me know if that concept makes sense. It's really, really important to trading, because a lot of folks, like, they see it, they miss the first trade. Then they miss the second trade. They're like, oh, you know what? The next time it gets to that zone, I'm going to fucking put my whole account on it. I'm tired of missing the trade. And then they get in, and then that's the time that it breaks through. Right? And so the frustration just kind of gets bigger and bigger. But do you guys understand how that happens? It's the probability of the market breaking through the more times that it tests. So GJ, that's pretty simple. Gold, I was talking to Stefano about this morning. At first, we were kind of expecting a bit of a retracement before the push, which might still come later in the week. We might still get this later in the week. So don't, excuse me, don't forget about this 1830 zone, because later in the week it will get tested. But what we see here is we broke above the previous highs. We formed a bullish flag. So we had 1, 2, 3, 4 candles, bullish flag, price rejected, and then just popped off. The only confirmation that I personally saw was on the 30-minute, which was basically when you have a flag. This is about as easy as trading can get. What you can do is draw a trend line to measure the structure, not measure the structure, but to kind of like qualitatively look at the structure, identify the break and test above that structure. And then as soon as you get a closure above, you know that we've broken that wedge. So this is how I can tell whether we have some kind of reversal or a continuation. Is we have a bull flag. Here's the highs. We broke through the highs. So for a bullish flag, for those of you guys that don't know, you're either going to get two things: a bullish continuation or a retest of the last highs for a double top and then drop. So it's like a fake out versus a genuine break. So this would be the area where I would have taken my first set of profits. Now what you can see is price is forming support at this previous high. So we've already violated this idea of a double top, and so it's going to continue bullish. You guys know Stefano has had his 1900 target for a while, and I still stand by that 1900 target. So I support Stefano. I support his perspective on this, and the 1900 target is still valid for gold for the long term. Okay. Someone's saying some intelligent stuff in the chat. Hold up. Of course, it's Oz. He said, we associate and create intrinsic biases on the colors green as go and red as stop. That's for sure. And we take it one step further with red and blue for trading. All right. I have no interest in the rest of these pairs, so I'm going to go back to my baby, Nasdaq. And I think the easiest way, and not the easiest way, but I think the most productive way for us to trade right now is for me to show you guys what happened yesterday, so you get an idea of how this market actually behaves. So what happened yesterday, this was the consolidation over New York, or like pre-New York. It pushed up. Then we had a consolidation during the London session. Now, what I want you guys to notice is the consolidation, fake up, and then liquidate. Yesterday, if you guys were on the call, you guys have no idea how frustrated I was yesterday. We had this pre-session consolidation. The market pushed up and came back, and I'm sitting here trying to short. I'm trying to short because I'm expecting the consolidation fake up and drop. The consolidation fake up and drop, and it hits us with another one. So I did lose money on the shorts. And then when the market came back, what did I do? I re-entered off of my liquidity zone. Okay. If you guys see a black line or a blue zone on my chart, those levels are solid, about as solid as it can get. Right. I might get sued by a market maker for how accurate these levels are. So on the break back in, oh, what? On the break back in for that retest of the sell zone, that's where I took the shorts. So I took my first shorts down. Retest of the pre-session consolidation was where I took longs. And then I took another short here at the retest. If you guys are in the, actually, no, I didn't even send it in that. I sent it in a private group chat on text message, but I had the short from up here, took profits way too soon. Now, what are we seeing? All of the same levels are getting respected. So I'm going to do the same exact activity where I'm going to mark off the lows and the highs of the session and the different areas of consolidation so that I can trade those levels on the way back in. So the biggest area of consolidation I see is this pre-session consolidation here, which I think might be more accurately drawn like this. We got the lows and the highs. So on the higher time frame, I told you guys we're still at a sell zone. But if we can't break under this blue level, so for example, I'm expecting the same thing that happened before, which is if we get a retest here, then we can get a nice push up, right? So if we can't break below here, price is going to dip down and push up. However, what happened at the red zone was a massive sell and a short to the downside. Sell, short to the downside. So that's my base case. The reason I have these levels is because let's say that I missed the sell. Let's say it goes like this and then comes back down. I can still take a buy here. I can take a buy down here. If the market breaks and retest, I can take a sell right here. If it breaks through and retest, I can take a sell right here. If we break back above and retest, I can take a buy right here. So do you guys understand that as long as you have these high reaction zones, you can identify whether it's being tested as support or resistance and then trade it based on the direction of the trend. So right now it's bullish, or sorry, we're on the 30 minutes. So let me be accurate here. We are bearish on the 30 minute. So I'm still expecting a shorting opportunity. It's either going to be here at this 15,220, or it's going to be all the way up here at 15,280. Those are the two sell zones. So I'm going to use, I'm going to short as my primary bias because of the direction. If I miss the shorts and the market hits my key levels, then I can look to go long down here. Not because I'm trading with the momentum, but because those high reaction zones are going to get respected. Not going to get respected, but they have a high probability of getting respected. So that's how I trade. It's buy low, sell high. And my first bias is always to go with the direction of the momentum, which right now is bearish. So we on the smaller time frames. We have the pre-session consolidations. We got everything that we need to be able to trade this market effectively. So here's another pre-session consolidation. Let me mark this off. Yep, so this was like 6 a.m. to 7 a.m. So here's the previous consolidation and here's the highs. So we either test these highs and then we like break back above, so we can't really break under. We can't close under. Or we completely violate, close under, then we can look for a retest of 15,185. Okay, previous sell level, previous sell level. Is this making sense to you guys? I know a lot of you are in different levels of your trading. I'm talking to the folks on Zoom here. I know a lot of you guys some of you are beginners, some of you guys are more advanced. I know I sometimes use language like liquidity zones, pre-market consolidation, and these like kind of fancy words, but really they just mean sideways movement before the market opened, or like a sell zone or something like that. They have a pretty generic definition. I just want to make sure that we're all on the same page as to what we're looking at. The very, very first thing is the momentum. It's bearish. So we're looking for a retest of a sell zone. The second thing is we go to the smaller time frame and look at which zones the market is respecting and where it's reacting. So we have those levels marked up. And the last thing is to look for the candlestick reversal patterns that indicate a reversal of the trend or that indicate a continuation of the trend. Does that make sense? So it's an order of operations here. If it doesn't make sense, we'll go hit the course.
Yes, there was some high impact news at 8:30 as well.
Yep. I think there was employment news, if I'm not mistaken. The unemployment numbers. So we had manufacturing news come out positive. Manufacturing is good, but the unemployment claims is getting higher. Sheesh. Oh. That's not good for the economy. So we have 4 out of the last 5 unemployment reports come out higher than expected. And I don't even know why these analysts are trying. Like, imagine if your job was to guess what this number was going to be, and you're wrong every fucking time. What is your job? Oh man.
Yeah,
inflation
dollar
and
took a hit on that. Dollar tanked a little bit.
100%. This is definitely negative for the news. This is definitely negative for indices. Existing home sales. This is the one that I'm the most interested in. I want to see what the strength of the housing market is doing. Looks like home sales have been positive month over month. So let's see how today's print comes out to see if we still have a positive trend. We have a positive trend right now, positive trend in home sales. If we get 1 month where it dips down, it's really going to start to scare the markets. So that's a big focus of mine. Um, okay, what I'm going to do is I'm actually going to write down the levels that we can short from. So we're either going to sell at 15,285. I'm giving you guys the fucking roadmap right now. So this is how I see markets. This is basically what goes through my mind when I look at my levels. Is I have instructions for each level that I'm already thinking of in my mind. So if I get a double top rejection here, I'm looking to short off of 15,220. 15,220. There's a lot of sell zones. And the only qualification for this is that the market has to break under and then retest. No retest, no entry. So if we don't get a retest, it just starts pushing up, no entry. Alrighty. While the market opens, is going to be about 8 minutes until the market open. I'm going to run to the restroom. If you guys have any questions, post them in the chat. I'll be back in just a second. All right. Don't go anywhere. We'll be right back. Okay. Back. Are we bullish or bearish on Nas? Bro. So the momentum on the 30-minute and the 1 hour is bearish. So we're looking to short. If the market can't break below the zone, then we're going to start to look for buys. All right, so the market's about to open in a few minutes. See a nice head and shoulders right here. This could have been a good entry right here. 15,200. So if we get a push back up 15,200 or 15,220, there's about a 20-point range right here where we could short from. So that's kind of what I'm looking at. There's one more retest back up. We might not get that retest. I'm not really that upset about it. If we get a right shoulder, so let's say that we break through, price tries to go back bullish and it can't break, we can short off of this right shoulder. So I'm watching these zones. I got the levels up, watching the market open. And like I said, guys, I am not going to be rushing into trades just for the sake of entering a trade on the session. Instead, what I'm going to do is, if there's something that's too good to ignore, then I'll enter. A lot of you guys are qualified to take your trades. If you guys see something on the charts that you want to trade, then go ahead and trade it. It's really that simple. I'm already in a short from last night at 15,180. So I am sitting in some drawdown on that short. Just wanted to give you guys a heads up. I woke up, I was in profits. This thing hit my 180 zone. This was the entry. I got a nice entry on the first go. I woke up in deep profits, about 500 pips. Went on my run. By the time I came back from my run, I was already in drawdown. So now I've just been basically holding the drawdown from my original entry here at 15,180. And as soon as we break back through, I'm looking to re-enter that trade upon the confirmation. So let's see what the market gives. There's also a good scalp opportunity right here at 15,160. Because I know that we're scalp, when we trade these, kind of looking for these scalp moves just to get in and get out. This range right here is about 200 to 300 pips. I think we're going to get a good reaction off of this trend line. You guys are going to see that Nas loves trend lines. It's going to break through a little bit. Let me draw my fib. Excuse me. So we have the 61 trend line right here, or 61% fib, and the trend line rejection right here. This is going to be a high reaction for sure. So we're going to go down, back up. And now the whole question is, do we pass this area here or do we reject? If we keep rejecting, I want to short it down. That's how I look at this. If it breaks through, I'm going to have to reassess. So that's what I'm looking at right now. And while that develops, I kind of just want to get you guys some value that you might not be able to find somewhere else. Maybe some news, maybe some crypto. If you guys have any questions about crypto, NFT, news, things that you guys can't just like find somewhere else, this is the place to ask. If there's something fundamental that you guys don't understand about the market, about the cryptocurrency market, about the NFT market, now would be a great time to ask. Roy, do sessions matter if price is at my support? Could I take it at any time of the day? It just depends on the candlestick formations. Roy, do I have to take a trade at the New York Open, or can I wait, or can I take it whenever I see a setup? You can take it whenever you see a setup, but if you're trading the market open, you have to expect those giant whipsaw, those giant wicks to the upside and to the downside. So right now we're about to experience that whipsawing action. What I'd personally like to do is to wait until the market finishes doing the whipsaw for me to get into the charts.
I think yesterday you said you're looking at 2 different NFTs, and we had that one yesterday. What was the other one that you?
The other one sold out in minutes. It's a huge L. It was called the Hape. These like 8K Hate Beast NFTs. These are 8K pictures that are made virtually. I think, yeah, so they sold out in like minutes and they already listed. So when you go to OpenSea, the floor price now is like, I don't even want to check, honest to God. I think it's going to hurt my feelings. Because these things minted for 0.2 Ethereums. 0.2 Ethereum each. The Nelk Boys drop I minted for 0.75. So if you guys want to know what those numbers mean, 0.75 is like $2,300. 0.2 is like freaking God, I'm gonna look so stupid if I do this math wrong. Like
One of
600.
those sold for 24 ETH.
You're fucking lying.
Nah, man, I'm looking at it right now. Someone sent me something on it.
All right, OpenSea is having some issues, man. Come on.
They bought it for 1,000 and sold for 24 ETH.
That's
Is there
insane.
anything else on the horizon?
New projects. Personally, I actually the last project that I saw was the Nelk Boys drop, the meta card NFT. So that's the one that I just recently got involved in. I'm not looking at another project right now, but I'm keeping my eyes out for sure. Number one priority for me is to keep my eyes out for any projects that are coming out. So we are at the market open. You guys can see there's a lot of volume that gets pushed in. A lot of volume that gets pushed in. If we get a rejection here, actually, I'm looking to short here very, very soon. So let's see if it closes back under. Let's see if it wicks. If it wicks, I'm going to enter some small positions here. If it closes above, then bulls have it for the day.
She's running now.
Yep.
Ooh,
daily-
look at that head. Look at that. She poke her head out.
But the daily is still short, so I'm still short. I'm still short. We're still at a daily sell zone. I'm going to enter another short position right now. And I'm not going to enter a full position. What I'm going to do is I'm going to enter a partial position here. And then as the market drops back and breaks the trend line, I can look for a retest to enter the rest of my position. Here's what I want to see. Existing home sales is at 10 a.m. So it's another 30 minutes. And I'm going to put my stop loss above this liquidity zone. I know it's a little bit far. It's about 40 points away, but I want to give it enough room to breathe for this trade to play out. If we start to close above, then I'll just manually close the trade. My stop loss is going to be somewhere around 15,260 or 15,270. So to remind everybody where we're at on the daily, yeah, it's breaking above pretty heavy. I'm not going to sit here and lie to you guys. It's getting a little bit aggressive here. But my whole thesis was huge sell zone right here. And price was testing that sell level. And so I was expecting a wick right here and then a push to the downside. There we go. We're getting a minor rejection. So it's a good sign so far, but we needed to really follow through with these rejections. Another important thing is that if you guys take any trades on the stream and you're in profits, you can close whenever you're in blues and walk away with the profit. You don't have to keep holding the trade the same way that I would. My priority is that I'm trying to like think kind of bigger picture in these markets. So I'm entering off of a 4-hour zone. So even though I'm on the 5-minute time frame for my actual execution entry, the reason I'm entering the zones is because of a higher time frame idea. And so I have to allow the higher time frame idea to play out. I can't just like panic close whenever I see, the profits. But we are deep in profits. We're about, let's call it about 300 pips in profit. So if you guys took that entry, you are in profit, and you have that opportunity to either close or you can put it in break even. This is your risk. That's your choice to take. How do NFT royalties work? I'll be completely honest. I'm still doing my research on royalties. I'm still doing my research on how you can stake them to earn royalties, where the royalties even come from, and things like that. So that's a big focus of mine right now. I got some new launches coming up. I'm gonna drop in the Discord. Justin is the plug, guys. Shout out to Justin Coffee. If you guys bought a Bored Ape NFT from us, or not from us, like through us, you guys saw the video I posted about minting the NFTs, and you guys decided to jump on. You saw it on social media, and you guys decided to jump on. You were in the crypto chat, and you decided to jump in. Give a huge shout out to Justin Coffee in this chat, because he's the one that first brought it up in the chat. And then the morning of the mint, he was the one that was posting about it, that brought it to my attention. So Justin, shout out to you. Those Bored Ape NFTs were a great introduction for a lot of people to get into the NFT space. So just want to make sure that you get your credit, because you had your eye on the ball for that one. So this is what I found also. Right now it's about 9:37 a.m. EST. Usually we don't get the full directional move of the day until about 10:30. So we literally have a whole hour before this thing plays out. And we're on the 5-minute chart. So this is a game of, if you guys are on this stream and you caught this scalp, you want to walk away with profits, it'd be the time to lock them in. If you guys want to look for a re-entry opportunity, you can come back in an hour. Or if you guys just want to hold this for the next hour, that's also an option for you. Now we are in profit. Hey, I just closed partial profits. Just a heads up for everybody. I just closed partials, and I'm going to hold the rest of my trade. Right now, we're currently running about 270 pips, floating anywhere between 200 to 270. The bottom of the wick to where it like peaks down is about 370 pips. If you guys are trading with FTMO, then it's 37 pips or 27 pips, however you guys want to look at the markets. I'm using Hugo's way right now. So the way they count it is in terms of like the 100 pips. So that's how I'm counting the pip count. A closure below the lows would be great. What I really don't want to see is the wick get filled, because if the wick gets filled, that means that the price is in bullish momentum. So I'd much rather have this thing close below the bodies, or even better, just completely break down bearish. Those are the two options. I made $1,700 off one card. Justin, if you're going to the summit, I owe you a few cocktails. Yes, sir. That's what I want to hear. That's what I want to hear. Send Justin some Solana. Stefano says, I see gold shorts 1845. I do too. I didn't want to say anything about the long bias, but we see this right here. Can't break. Small time frame, quick trend line. As soon as we break past that trend line, we can get a nice push back to like 1840 or 1835. That'd be a pretty good zone. Either all the way back to these lows for a retest, or if we just go based on highs and low, either a break back in the range or to the bottom. So the bottom of this range is 1837. If we fib the move, a good goal target 1 would be 1840. Target 2 would be 38. And if it breaks below here, 1830 is the target. Excuse me. I'm holding this drawdown. This thing could push as high as 240 before it drops. So if you guys look left, I'm entering off the body of the candles, but the wick is all the way up here. So it could just be grabbing liquidity now before it breaks down. If this thing fills and closes above, I'm just going to get out of this trade, and I'll come back in about 40 minutes or about 30 minutes to check back for the direction. Sheesh.
I'm gonna share you my my chart. I am looking for sell though. I'm gonna wait a little.
Jesus Christ. Like someone's gonna have to explain this to me. Someone's gonna have to explain this to me. How in a year where we're about to enter kind of like a recession and we have negative news coming out in terms of people being unemployed, how we have a labor shortage, how we're in a supply chain crisis, how they're about to stop quantitative easing, and the markets are still finding some liquidity to make massive moves like this. I really, I don't know. I really don't know what to tell you guys. But I think it's just pushing up to this 280 level before it shorts again. So this could be another re-entry or this liquidity zone up here at 320. Those are the other two options. So as usual, I think the direction is still correct, but the entry was just really early.
What do you think about the pending war with Russia having on the markets?
We're not going to war with Russia.
I'm not going to war with them, but that might be hyping some situations. You know what I mean? Just the possibility of them mating.
It could be. Folks could be moving their money away from other things and putting them in the U.S. stock market. The thing is, like, putting your money in tech stocks right now is the worst thing to do. It's the riskiest thing to do. If you're actually worried about geopolitical tensions, you're going to move your money either to the US dollar, you're going to move them over to gold, you're going to move them over to Bitcoin, and things that are kind of resistant against geopolitical conflict. Nasdaq is the most susceptible to geopolitical conflict, so that would go bearish. We're not going to beef with Russia because we can squeeze them whenever we want. The only kind of like relationship that we have with them is that they are a lower cost producer of oil than we are. But what we can do is we're best friends with Saudi Arabia. So if there's an oil war that kind of starts, which is the only kind of real engagement that we have with Russia, we'll just bring in Saudi Arabia. We'll lower the price of oil. we'll squeeze Russia out of the market, and then we'll kind of go back to some kind of normalcy. So I don't think that I'm not as concerned about the Russia conflict as much as I am concerned about China, Taiwan kind of invasion type conflict. If Russia invades Ukraine, I don't think we'll intervene. But if China invades Taiwan, we will. So that's kind of like the relationship that we have. Still early. Time moves so slow in the morning. So we still have about probably 30 minutes before we really get an answer for the direction. I'm not looking to close my trades until I see some kind of retracement. I don't want to close my trades up here. What I want to do is wait until it retraces and at least kind of close in break even or in profit. I'm still bearish on the overall direction of the market, at least on this time frame. So I think that the market is most likely going to be respecting this sort of motion where we have push up here and then we drop. This 280 zone right here, or even as high as 320. So that's it for the entries. I'm going to come back and check on this in about 20 minutes. That's when we're really going to have a clear idea of where the market's going. Right now at the market open, we're going to see a lot of violent moves. It's just the way it is. But just like yesterday, here's what we saw at the market open. A lot of folks were saying buy, buy, buy because there was very aggressive candlesticks. And then 5 minutes after, we got a massive drop. So I understand that the markets are moving aggressively, but usually they do that in order to race towards a zone where they're gonna make a real move. This is a perfect example. You guys see how aggressively bullish this is? All it did was race up to the liquidity zone. Once it hit that liquidity zone, the previous sell zone back here, it ended up dropping. So that's why I'm not so hasty to be like, oh my God, the market's like, I saw one green candle. Let me just completely shift my bias. What I'm really looking to see is if we are going to make a push back down and continue the bearish momentum, or if buyers are going to take back control over the market.
I just enter off a short.
Sounds good. Euro USD shorts are valid on the higher time frames. If we break the trend line, 1.123 is the target. Oh, this was too easy. SPX still respecting that daily support. For SPX specifically, I still think, as long as we're respecting this daily support, I think that we could get a retest. If we hold, it'd be a perfect place for longs. That 55 or 45.50. 45.50. So we're rejecting the extension level. Let's see if this is the one that's going to help push us back down. We'll just keep an eye out for it.
Let's go. She's falling.
All right, we're closing below this line. We're closing below the sell zone. It's a pretty good sign. Let's see if we get to, let's see if we get a closure below 15,220. Sheesh, that was not fun. Yeah. Okay, we got similar zones. 15,330. I mean, I guess it could reach all the way here, but I'm guessing you have this blue zone as the daily level. So if as long as we don't close above the daily level, then the bears are still in control. If we close above the daily zone, then it's a shift in momentum. Buyers take control. My whole thing is like, you got to trade with the momentum of the market until it proves that it's shifting. Right now, it's kind of proven that it's getting aggressive, but until it breaks the daily zone, until it breaks this like 300 level, maybe this like these previous highs, it's still shorts for me. These markets are acting so weird. They're just all liquidity grabs.
Yeah, a lot of stop points going on too.
Jesus Christ. Even Bitcoin is pumping.
Roy, check the link I just sent.
Too fucking easy. So gold pumping, Bitcoin pumping, and stocks are pumping. Now that just don't make any fucking sense. Yeah, I saw that. I see third touch trend line 78. That's why I'm trying my best to be patient with this, but it's just frustrating. Like my trading style is not hold the drawdown. Usually, it's really just like close the trade and then look for a re-entry. I'm trying to develop some sort of patience. I don't want to be too in and out of the trades. I really just want to like set a direction and really trust the direction. But Nasdaq makes it very fucking hard because if I like holding this short is just, basically just holding drawdown for no reason. So yeah, it could push up to that third touch on the trend line 78, and then we can get a drop from either 285 or from 330. So I'm telling you, like these are still the sell zones. Now, if you took the trade here, the original trade, and you made profit and you closed it, then you walked away in blue. That's why I made that disclaimer while we were in the trade. It's like you don't have to hold these moves. If you're up 200 or 300 pips and you close in blue, you're gonna make money on these streams. So you guys can basically hop on here, take the right entry, catch the blues, and then walk away. If you want to, if you can accept the risk and just stay in the trade, that's when we try to go for more directional things. Yeah, I'm jumping out of this trade. If we don't reject here, if we break above 285, I'm jumping out. I'll come back in about 20 minutes and reassess. But this is crazy drawdown. This is an insane amount of drawdown. It's the moment of truth. Said, bro, sorry you never closed in profit on the big dip. Y'all ain't got to be sorry for me. I know what the fuck I'm doing. This is for you guys. If I ever feel some kind of way on these streams, it's not because I lost money. People, I've been trading since 2016, right? I know how to fall off a horse and get back on. This is mostly for you guys, and I just want to make sure that if folks are getting on the stream, at least you're walking away with profits, or you're walking away with an understanding of why you made profits or not. Y'all ain't gotta feel bad for me, bro. This is all part of the game. If I lose, let's say I lose $2,000 on this trade, I'm gonna make it back in one other trade. Now, this drawdown is a little bit severe, but that's why I said I didn't enter a full position. And even when it did dip down, I took partials. So I'm not even holding as big of a position as I could have. So like the drawdown is all right. This is really more so about providing you guys an opportunity to either make money or to learn. And whenever we don't make money on the stream, I kind of take it personal. So that's kind of what we're doing here. But I'm good on my trading. Does TradingView got time difference like that of countries? Yeah, you should. If you go down to the settings tab on TradingView, where is it at? It's right here. I think you can do. There'll be time zones. I think you can adjust. Oh, here's how you adjust the time zone. So I'm in New York time. That's why I have it set that way. And it has like this nice countdown. It'll tell you there's about 10 hours left in the session. The candle countdowns and everything are in local time. So it's pretty convenient. All right. What I'm personally going to do is I'm going to close my trades in negative. If there's a shorting opportunity, well, now is probably not the best time to close. It finally hit the 78 almost. So let's see if we get a rejection off the 78. This is like the last line of defense for me. Is key level 78. If we break through this, then I'm just going to close in a loss. But this is kind of like the line of defense where the market could flip. We look left.
Yo, home sales just dropped just now.
10 a.m. 6.18. It's not, this is not a bad number, especially with the current circumstance that we have. It's just lower than the expected forecast. This number is more bearish than this one is. So if the markets are going to drop, it's going to be because of this. Whatever we're seeing now is probably just a liquidity grab. But that the home sales being off by like 50,000, not really that big of a deal. The fact that we're even still selling homes in an environment where there's no money in the market, that's what's really impressive. All right. I'm going to close half my position. And what I'm going to do is leave the other one open. If there's a re-entry, I'm going to take it later. This is just not a good use of time. Honestly, I don't really want to just sit here and wait for this thing to turn around. I'm going to jump out. If there's another opportunity in about an hour, I'll look at it. The zones I'm watching are 15,330 and 15,380. Do I really want to trade against the momentum of the open? Not really. That's why, like, if you guys do want to take those shorts up here, just make sure that you look for a solid reversal. But I'm going to take my loss for the day. All right, ChartAddicts members, keep an eye out. I'm going to send a signal if I see a reversal. Everybody else, if you guys didn't make money on today's stream, if you guys didn't close on the first trade, you entered another position or you held through the drawdown. Maybe you guys learned something from today. At least you guys might have taken something away from this from the session. If you did take something away from the session, put it down in the YouTube comments below. Make sure to drop a like. Make sure to drop a subscribe. Even if we didn't make money, at least let's have some sort of let's at least see if we can take something away from this and get you guys on board for the next one. Price is going short term up, but it's a downtrend. Yeah, it's exactly what's happening. Said, hey, Roy, I've shown up on most of the free webinars and I've learned a lot. Thank you, and I appreciate it. There we go.
Anybody on these gold shorts, man?
I'm in gold at 19 or 1846.
I got on 1845, 1846.8. So I got two positions on. That's it.
Still on longs from 1815.
You might want to hold that 1815, bro. That shit's never gonna get down there.
Yeah. I got my stops at break even now. So. Waiting to see if it makes a bigger retracement before I move them into profit.
I hop back in the Nas short, but it's feeling a little iffy right now.
All right, y'all, I'm gonna have to hop off here pretty soon. I got a very, very full day. Got to get to it and focus. If you guys took something away from this stream, let me know. Put it in the YouTube comments. If not, take it easy, everybody. ChartAddicts members, great to see all of you guys hopping on. Thank you for all your insight. Thank you guys for sharing your markups. I really enjoyed like looking at you guys' perspectives. It gave me a better perspective on what I was seeing on the charts. Make sure you guys hop on all the live streams that we do if you guys are a ChartAddicts member, and bring your markups, bring your perspectives, so that we can have a more productive conversation. Okay? Take it easy, you guys. Happy and safe trading. Make sure to keep risk management at the top of your priority list. Losses are okay as long as the risk was managed. As long as you were able to limit your losses to something reasonable to your account, is just another day. As long as you gave yourself the ability to make the money back off of one trade or two trades, you're doing the right thing. If you're over leveraging, trying to make quick money, and it's hurting your account, that's the first place that you guys can start to improve your trading. Not all trades will go your way. This is just a function of the markets. We have key levels. We try to take a chance at these key levels, and we try to find high probability setups. If the market doesn't go your way, it's got to feel like a quick scratch, a quick scrape. It should not feel like a knife wound. It should not be a very severe thing for your account. Alrighty, so keep risk management at the absolute priority, and trading in these volatile market conditions will become a lot more manageable. When you're over leveraging in these conditions where the markets are not functioning the way they're supposed to, not the way they're supposed to, but they're not functioning normally, then at least the risk management will protect you. All right. Take it easy, guys. Happy and safe trading today. Those are the levels. I'm going to catch you later. And Nas shorts, I think, are still valid. Just throwing that out there. The entry might have been early, but the direction's still bearish.